Hey everyone, this is Rob Keens with GoldSilverPros.com. It's Monday, September 14th, 2020. And for today's video, I'm going to be reviewing a gold stock company called GoldMining Inc., who I think has a unique value proposition for investors. It may be a little bit different than a lot of gold mining companies you see in this space. You can find them on the TSX, Toronto Stock Exchange, under the ticker GOLD, and under the OTCs in the US under GLDLF. You can find more information about them at goldmining.com. One of the things that's really been challenging with the gold and silver sector recently, and even the whole entire junior miner resource sector, is getting investment. Since the high of gold in 2011, the Oren Inc. Canadian Resource Financing Index has fallen from an index value of 140 to just over 60 in early 2019. A lot of that had to do with the lower gold and silver price and just general disinterest in the resource mining sector due to other sectors like the tech sector, the biotech sector, and some others. Well, with the 20% correction we had in the fourth quarter of 2018, gold has seen a resurgence in price, reaching all the way past $2,000 recently, eclipsing its all-time high of $1,900 in 2011. And so what's happened is resource mining has gotten a little bit more investment since 2019. Money is starting to come into it. Although, as we can see on this chart from 2011 to 2019, it was basically a protracted decline. And what happens when the money leaves the space is a lot of companies that have these single gold mines or a couple of different gold mine projects really struggle to get financing to stay afloat. And at that point in time, a lot of these companies can be had for pennies on the dollar, and that's where GoldMining Inc. comes in. So GoldMining has basically acquired a bunch of assets in North America and South America, the 14 total, and you can see all of their estimated resources here. There are over 13.8 million ounces measured and indicated for the company. And you can see each project has its own different amount of contained metal. There are also copper in a lot of these projects as well. Gold and copper often get mined together in a lot of these deposits, especially the porphyry deposits. So as you can see, they have 14 different projects, all of them now economic at 1,900 gold. But when they started acquiring back at 1,100 gold, they weren't economic. So as the gold price has risen, a lot of these projects that maybe weren't quite economic or borderline are actually very economic now. And GoldMining Inc. now has a nice portfolio of assets. You can see here that they have 11.4 million ounces of measured and indicated. And if we expand that to inferred, it's 13.8 million ounces. They've also created a gold royalty corp, which we'll get into here in a moment, the advantages of having Gold Royalty Corp and what they may do with that. They have a growth strategy of potentially acquiring more resources as well. They have $7.1 million in cash with no debt, which is very important for a junior mining company trying to get off of the ground. And they have strong insider ownership, which we'll show here in a few moments. What they did was they acquired at the bottom of the gold cycle a lot of these properties. As you can see down here, they're acquiring them in the commodity bull market at lower prices of gold and below basically what the average cost of gold is for their peers in the market. So they've gotten their gold ounces in the ground a lot cheaper than a lot of their competition in the space. And you can see when they acquired all of these by this colored chart here at the bottom, they were really getting them as the commodity price was falling, as the gold price was falling. I want to talk about their share structure for a moment. Issued and outstanding, they have 145.4 million shares, about 157.1 fully diluted, which is not bad considering the amount of ounces they have, 11.8 measured and indicated, 13.8 inferred, which is larger than a lot of companies that have a single gold deposit. In fact, a lot of companies that have a single gold deposit will dilute to about 120 million shares just on that gold deposit alone, because they were able to get these acquisitions for pennies on the dollar, 10 to 20 cents on the dollar for what the gold was worth in the ground. They're able to get them very cheaply and therefore not overly dilute the company compared to how many ounces they have in the ground. I also want to point out some of the key shareholders here. You've got Sprott Global investing, Marin Katusa is investing, IAMGOLD Corporation, Brazil Invest. A lot of well-known companies are investing in this company, expecting that there's going to be a share price appreciation. And you can see the gold mining share price has appreciated since March of 2020 more than the price of gold. They've actually gotten some leverage to that. And that's what you want to see in a gold mining stock. You want to see that leverage. And at this point, GoldMining Inc. is not mining their gold. They're really still in the exploration stage, but instead of exploration, spending all these millions of dollars in drill results, they're acquiring, a lot of companies have already done that and acquiring some other assets where they could do some additional drilling. And what we're going to see is that classic increase in price as they continue to increase the reserves, but before they built the mine, which is really one of the sweet spots of investing you want to get into in the gold and silver space. This is a comparison of the cost of enterprise value, or the cost of the stock compared to the amount of gold they have in the ground per ounce. You can see GoldMining Inc. right now is costs about $29 or $28 per ounce of gold in the ground. And when you compare this with some other indexes, it's really, really cheap. They basically compare to the average junior explorers, which with much less measured and indicated resources, by the way. If you go up here, a lot of the producers and the industry average are 174 and 200 for some of the senior producers, and they're trading at a fraction of that at $29 an ounce. You know, some of the senior producers, $200 an ounce. It's very expensive to get gold at $200 an ounce. They've got their gold for less than $30 an ounce, which means the value proposition for investors is there's a lot of room to run, not only because of the rising gold price, but when they start producing gold, they'll have gotten their gold so cheaply, their overall cost would be very cheap, and they'll make more per ounce when they sell their gold than a lot of these senior producers will. So they expect to have some outsized performance in this company going forward. They've also created, to help them finance some of their projects, Gold Royalty Corp. What a royalty corp is, if you follow Frank Holmes at US Global Investors, or follow some of the royalty corps like Franco-Nevada or Wheaton Precious Metals, is they basically do early stage financing for these exploration companies to get money so that they can get their projects off the ground and build their gold mines. A lot of times it's very advantageous for the streamers because they're not taking on the risk of the gold mine not being built, because they'll have multiple different projects, and whichever ones are producing, they'll get a stream from that. Yes, the gold royalty companies do pay money up front, but they often get the gold for pennies on the dollar, because that's the risk of financing projects before they're built. So gold royalty corps tend to outperform the overall gold mining sector, and it's a good deal for investors. And what GoldMining Corp has done is they've created their own royalty corp and swung deals for their own projects. All of their own projects, the 14 projects that you saw earlier in the presentation, have streaming royalties on them for Gold Royalty Corp, which is a subsidiary of GoldMining Incorporated. So in other words, they've created a way to get streams off of their own properties and raise equity financing so that they can get some of those projects off the ground. And what is really cool is this Gold Royalty Corp will eventually be either IPO'd or spun off, and it'll be a unique value proposition for investors, because unlike new royalty corps who don't have assets to invest in, they already have 14 assets, many of those expected to be producing in the short term, that are going to help finance the profits for Gold Royalty Corp. In addition, I want you to take a look at who's running Gold Royalty Corp. This is a subsidiary. The former CEO of Gold Corp, David Garofalo, is running it, and they have a lot of really good talent on that company as well. So fully expect Gold Royalty Corp to do well when it is spun off. Of course, that would be a benefit to current shareholders of GoldMining Incorporated. Gold Royalty Corp portfolio has asset diversification. You can see here how many millions of ounces they have measured and indicated and inferred. Gold kill ounce, sorry. And then you compare that to the prices of some of the other gold streaming companies. Metalla has quite a few less: EMX, Eli, Abitibi, Sailfish. So Gold Royalty hasn't even become a public company yet, and they already have more assets than some of these other publicly traded companies. And because they're private, there's no valuation here. So the indication being that when they go public and they have more resources than Metalla and some of these other companies, they should be able to compete and actually trade at a premium to some of these other streamers who have just gotten off the ground in the last few years. It gives them a distinct. One other thing I wanted to point out with GoldMining Incorporated is that they have a really experienced leadership team. Their chairman, Amir Adnani, is an entrepreneur, founder, CEO of Random Energy Corp. If any of you have gone to PDAC or Metals Investor Forum or any of these resource investor forums, you'll have probably seen Amir speak and also have talked to his company, which is very popular. Garrett Dawson, 30 years in the industry. Paulo Pierre has experience in Brazil and South America, where they have some assets. Gloria Ballesta, but based in Colombia. So again, they're recruiting talent that have done these gold mines in the various areas of the companies doing business, which gives them a distinct advantage. One of the key things about management is not only have they run companies successfully, have they been serially successful, as Rick Rule likes to say, but also do they have talent that has done it in the countries, in the jurisdictions they're going to be mining, and has a relationship with the government, and has the ability basically to get the job done, so to speak. And they've definitely recruited a very experienced leadership team for that. That's one of the big things to think about in a mining company. It's not only the projects, it's not only the financing, it's the people that are running the company. And I think this company has done a pretty good job. I wanted to go to the chart here for a moment. You can see that they've had a really good price run up since March of 2020. I think the market has begun to notice their value. And so they have really spiked from less than $1 to almost $3, currently trading about $2.60 today. And you can see all the ratings here from Seeking Alpha authors, they're all bullish. There's 4 bullish ratings, no bearish ratings. So pretty good reviews from the Seeking Alpha people on how they feel about the stock. I wanted to look at the chart, and if you've seen the last 6 months, they've had a 217% return compared with S&P 500 at 41.29. And if you look for a full calendar year, it's 181.08%. So the stock has run up quite a bit based upon the fact that they have acquired these assets very cheap, and the market's starting to notice that. And they're also seeing their strategy of building a royalty corp out of that, helping finance their own projects and then spinning that off as a separate valuable company. It's really a genius move, I think. And I think some of the risk is that some people feel as though this price is a little too frothy for them. But if you look at their valuation at $2.60, they're still getting gold out of the ground at $29, an ounce at the current market capitalization, which is cheap compared to their peers. If we go back to those charts that we saw earlier, we'll go back to that. You can see that they're nowhere over more expensive than some of these other companies that are mining. They're still cheap. So even though they're trading at that 260 mark and they've had this nice run up, I think there's still some time for that to run up more. And another thing to remember, if you remember Pierre Lisson's chart when he says some of the sweet spots to invest in the miners is while they're exploring and drilling out and getting additional resource, which they're still doing in some of the fields. So there's still some room to run. And also before they build the mine. And when they build the mine, they get a nice little bump as well. So I think that the stock has a capability of continuing to run to the upside. I don't think it's quite done yet, but I wouldn't, it wouldn't surprise me to see a little bit of sideways motion for here as some people take their profits. That would be a really good point in time for people to get involved in the stock if you like it, because I think it's going to continue to run up. Now, there are some risks with this stock. They do have to build the mines, and that's going to take some capital and probably some share dilution. Again, given the amount of projects that they have and the overall amount of resource they've already identified, I don't think that's going to be a really big deal. Their share dilution is not going to be any more per ounce of gold they have in the ground than a lot of the big producers. In fact, I expect it to be less. So overall, I think shareholders are still going to get a larger chunk of return out of that gold profit that they're going to see than they would with some other companies, especially these small miners that may have only 1 or 2 different projects. The other risk is that the gold price falls. And if you've been watching my channel, I don't think it's going to fall anytime soon. We have $15 trillion in debt across the world, negative yielding debt. And there are a lot of economic issues that have kept the gold price up at that $1,900 to $2,000 range. And I think once we get into the December contracts, we see what happens on the futures market, that price could continue to run. It wouldn't surprise me at the end of year for that price to go back over $2,000. Again, they don't need $2,000 to mine all of these projects. I think they're going to do just fine at $1,300, $1,400 gold because they acquired them so cheaply. So as long as gold stays up in the area it's at, they should be able to make plenty of money off of that. And I still think the share price is going to appreciate before we get to the point where they start making some mine decisions for the projects. And again, 14 projects, a lot of them having a lot of room to run additional exploration upside. These projects, a lot of them had millions of dollars invested in them by their previous companies trying to develop them. But when the gold price fell from 1,900 to 1,100, it was no longer economic. GoldMining Inc. steps in, picks up the properties in the cheap, puts it all together in this massive portfolio, recruits talent that knows how to mine in these areas, and then it develops a gold royalty company to get financing in the door in a time when it's very tough to do so, and also gives them the ability to spin that off and give shareholders a nice little return on their money when that happens. I think really a lot of good things to talk about this company. This is not your average gold producer. It's run by very good management. It has very good resources, and it has a good secondary value proposition, the royalty streaming company. I think you could do a lot worse. In fact, I expect the profits to continue to be healthy for shareholders to buy into it, even at the current price of $2.60. I think you're still going to do very well. And if you continue to hold the stock when they start building their mine, you're going to get that nice little boost from when they produce and start getting profits from it. And then the big generalist firms come in and start investing in it. And given the fact that they have almost 14 million ounces of gold and a lot of room to explore and get additional ounces, I think this could be where some big investors come in. Of course, you've already got Sprott, you've already got Marion Katusi, you've already got IM Gold, but I think some of the big hedge funds and money managers could come in as well and invest in this company as they continue to build out their resource. So I don't think a whole lot of risk compared to other plays in the space. And that's really why I wanted to bring this to you. I think they've got some advantages that some of these single or just 2 project gold producers may not have, especially at the price that they acquired their assets. I think this could potentially be really good for you. Of course, you should make your own decision, do your own research. But if you have any questions, feel free to email me at robert@goldsilverpros.com. and I'd be happy to give you my opinion on the company, which I'm very high on. Till next time, this is Rob Keents with GoldSilverPros.com.